Well, joining us now this morning, our guest host is Geoffrey Garrett, Chief Executive of the US Studies Centre at the University of Sydney, along with Kerry Juice, Equity Strategist at BBY. Good to have you both with us, gentlemen. Thanks for joining us here this morning. Well, Kerry, if I can start with some of the market talk and ahead of the G20, what are you looking for out of this key conference?
Well, to date, I think the G20 is doing pretty much what you'd expect. They're focusing on executive remuneration, etc. So they're not really addressing the issues which resulted in the financial crisis that we've lived through. That's got good and bad things. I'm actually quite happy that they focus on executive remuneration to some extent and we maybe take a little bit slower on some of the regulation so that we don't shoot from the hip and we let the market settle down a little bit. So I'm quite happy the fact that it seems quite misdirected to me at this point in time.
Well, let's hear from our guest host, Geoffrey. This is your particular field of expertise, how the world repairs post-global financial crisis, and particularly to see the challenge as chimerica. Can you explain this term chimerica to us?
Well, chimerica is not my term, actually. It's a British historian, Neil Ferguson's term. But what it means essentially is that the US and China are joined at the economic hip. They're driving the global economy, but they just don't see eye to eye on a lot of big picture issues, different worldviews, different political systems. And of course, I think the thing that the world is worried about and the G20 leaders are worried about is that economic disputes between China and the US could derail global things. And we saw that last week with this tyres for chicken trade spat.
Indeed. So how much significance are you putting on that? Because some commentators are really looking at saying, well, this could boil over to a full-out trade war, or perhaps that's overstated. Maybe we won't ever get to that stage.
Well, I think there's, as in most cases, there's an on the one hand, on the other hand. On the one hand, this was really significant because President Obama, this was the first big decision he had to make on trade with China, and essentially he blinked. Was he going to be a protectionist? Was he going to be a free trader? He made a protectionist move, and an unprecedented one, because the decision didn't say that China wasn't playing by global trade rules. It simply said that Chinese tyres were too competitive in the US, so it should be able to impose tariffs. That's on the one hand. On the other hand, even though China retaliated, I think their decision to take the US to the WTO last week actually was a move to de-escalate, because the WTO dispute resolution procedure will take years, not months. With any luck, we will have forgotten about tyres long before they ever decide.
Geoffrey, is it too premature for G20 to be discussing exit strategies at this point?
Exit strategies, I think exit strategies is the big story for Australia. Kevin Rudd obviously is concerned about how and when to remove bank guarantees. I think what we've heard from the G20 is that when they think coordinated exit strategies, they don't mean everyone does everything at the same time. So it's really a talking shop more than one global plan. Obviously, the backroom talk at the G20 will be about, is there a pre-consensus out there on Copenhagen? Can we get Doha trade round going? I think both of those things are looking pretty tough today.
Kerry, let's get your thoughts on that. You spoke about executive pay being one issue that no doubt will rear itself at this meeting, but do you think we should start to hear more firm news and more firm views on exit strategies this week?
I would hope not. We've got time on this, and that's why I'm quite happy with the executive, because it's meaningless, it's not going to make any difference, it's posturing, it's what's being talked about in the corridors which are more important. And I think the worst thing I'd see now would be some shoot-from-the-hip policy here, where, you know, some bad decisions are made. I think we've got a number of years to work through this. Exit strategies aren't particularly difficult, and I think most countries will adopt their exit strategy when they think it's necessary. For Australia, it's much earlier, and arguably we're already months over date on that. For other economies, it'll be somewhat later. I don't think there's any necessarily coordinated. It's horses for courses, and let's not try and put in place rules for everybody at this point. Let's just wait and see how things develop.
You know, I think there was actually a very interesting development in the US over the weekend. Chris Dodd, the head of the Senate Banking Committee, now has his own financial plan for the US that doesn't look like the Obama plan. So that's internal US, but I think what that means for things like the G20 is that any global process is just bound to be slowed down because the US legislative agenda is so backed up now. You've got healthcare that's going to take months, then they want to deal with climate change, and really financial reform was going to be the third of that big three. And so we're now talking middle 2010 later, I think, for any resolution on the US side about what their rules will look like after the crisis.
Super regulating. Yes, Shri.
Thanks, Karen. Kerry, we've got a packed economic diary coming out of the States, culminating, of course, in the Fed meeting. A lot of event risks for the market to digest. Broadly, are policymakers and is the data going to really tell us that the economy, that the recovery is still on track and is intact?
The recovery is on track, particularly in the US, with Europe and Japan somewhat lagging. I think the recovery is not the story. It's where we are in now, back after 2010, 2011. We've got an inventory rebuild recovery. That's set in place for the first half of next year. The question is what will be the potential or trend growth for China, Asia, the US, Europe and Japan when we come out of this after a year or two of just the restock cycle. We're in the restock cycle. It's very predictable. It's not that exciting. The main thing now for the markets to focus on is what will be the potential growth of these economies and the exit strategies 3 to 4 years out down the track. And that's where the market's looking now. It knows there's a recovery. It's priced it in.
What are your thoughts on the growth picture right now, Geoffrey?
Well, I think the interesting question, if you look to China and the US, is that both countries are saying that they need to have different growth models. China is saying they need a domestic consumption-driven model. The US wants to be more export and production-driven. In the short term, though, the stimulus packages that both governments put in are doing precisely the opposite. China's ramping up investment and production. Barack Obama is replacing private sector debt with public sector debt. So you have consumption-led recovery in the US, export-led recovery in China. It doesn't look like much has changed, at least in the short term.
Indeed.
Same old story, but where both sides are saying they need to change, and I think that's the big worry, that the changes they need to make are big domestic ones. You know, the US needs to overhaul its tax system, China needs a social safety net, they need an open retail financial sector. Those are really hard things to do, so if they're not working, maybe you blame the other side, and that's the concern that I would have about US-China economic frictions going forward.
We'll pick up on this throughout the program. Kerry, just before I let you go, I want to talk about a key conference that you've got here today on energy and carbon. Also on the eve of one of the biggest summits internationally on climate change, kind of key timing.
Yes, I think the key issue here is that markets have now moved on from the global financial crisis and exit strategies. They've gone back to where they were 2 to 3 years ago, and they're discussing the outlook for carbon, they're discussing the outlook for energy. And some of the modelling we do is not going to give you much solace there. That on my numbers, I think China will probably overtake the US somewhere after 2015 to 20 as the largest, say, carbon or energy consumer in the world, and we've had a huge ramp up. And one product of the global financial crisis, a byproduct, is that it looks like energy consumption globally over the next 5 to 10 years is going to be around 2 to 2.5%. The last decade's been 1.8. We're going to do a lot of backfilling of holes over the next decade, which I think is the major issue, actually.
Just 10 seconds before we go to a break.
I think there is a global deal out there. The interesting global deal, though, is American investment in Chinese renewables, both public and private. Not a big emissions trading scheme for the world.
Okay, well, we'll pick up on that throughout the show again. Thanks for joining us this morning. Kerry Juice from BBY, who is coming back, and so we're saying goodbye to him, actually, so he can go to a conference, but staying with us, Geoffrey Garrett, our guest host.